This is Satya Pradhuman of Cirrus Research. The latest issue of The Looking Glass has just been published. The title, Policy Quagmire to Surface Earnings Torpedoes. And this report is somewhat of a defensive move. The idea is that when we look at a number of measures, we're beginning to see increased market uncertainty outside of the fact that the market has sold down year to date. The fact that some of these other fundamental measures, such as the Small Business Uncertainty Index, has begun to climb. The Policy Uncertainty Index has actually spiked. These are the things that drive the degree of uncertainty, and as a result, the possible rotation in markets. One of the direct implications of these measures and the fact that the markets pulled back is the fact that the credit markets have been incredibly supportive. We're looking at 30-year lows in terms of credit spreads. That's the gray shaded area. The risk here is that if uncertainty grows, if the tariff policies begin to stretch out without any sort of finality, it is almost a given that the credit markets are going to begin to tighten. So as a result, this rotational market that we've been witnessing about valuations outperforming, or at least lower multiples losing less ground, these are the elements that are telling us that this is likely to continue. So the question is, how do we play defense in this environment? Number one, the risks that are surfacing basically tell us that growth expectations are going to come off a bit, just because of the sort of locked up system we've already been seeing this past few months. As a result, torpedoes really are a way to think about the holdings. The idea here is to look to the firms or the funds where the earnings expectations are most aggressive. The idea is that if you do have somewhat of a cyclical slowdown, some of those elements are going to begin to reflect that. Critical, as we focused on in this report, are areas such as technology and also financials. Conversely, what we're also noticing is that in this period of uncertainty, commodity prices are starting to rise. One way to think about positioning on that is sort of a fallen angels approach, which is the idea that some of the material sector, the expectations are incredibly low and may surprise to the upside as these commodity prices keep rising. So in terms of how we're framing the portfolio, whether it's funds or stocks, this idea about becoming defensive makes sense because of the sort of sluggish movement of business decisions that are currently underway. Take a look at the full report, and as always, happy to take your questions. Thank you.